I was tasked to start off with talking about insurance. Insurance is not, it's not all they do a little bit of insurance. But it is an extremely, sometimes it's an extremely important thing. You need to look at it. And first of all, you need to sit down, and it's a good process because it forces you to sit down and say, what do I have? And what happens? What am I making? What happens if I'm not around? And there's something in the book here. Everyone see this. This is how much life insurance do I need? The reality, if you're single right now and not married, you don't need so much life insurance. But you have kids and whatnot. You should, or planning kids in the near future, and you're in good health now. It's not a bad time. You should consider it. So you just sit down and say, how much money do I make? What happens? How am I going to replace that income? How much mortgage do I have to pay off? How much money do I owe? Some liquidity. You need 3 to 6 months of cash sitting there, pay for education. The estate settlement part there. I don't think you maybe do that. I don't know. And come up with a number, some number. Did I do this exactly like this? No. Have I done it? But I've sat down and I thought, what happens? How much money do I need? I thought, what's my mortgage? Once the mortgage is paid off, how much will be left? How much of my insurance do I have? How much is left? And I figured, if I were to draw out 4 to 5% of that a year, how much income would that generate? And is that enough? I'd probably maybe use a little bit more insurance. You can't insure against everything. You can protect against everything, but you need to decide how much insurance. Now,
you're going to send 2 kids to private school only taking 4 to 5% a year. Is that what I heard? When you said that,
my wife works. That helps. And I figure how much, pay off the mortgage. I say how much my monthly what I make now, and how much once the mortgage is paid off, how much less I would need.
So you're
and I'm willing to eat into principal a little bit. Into principal. That's what I the analysis that I went through was my wife works. She's got a pension. I have a couple $1 million in insurance. Most of it. Now the question is, what type of insurance? Is anyone familiar with the 2 types of insurance? Terms. Everyone know the term term insurance? Everyone heard the term term insurance and a more permanent insurance? All term insurance is pure insurance. You pay money for us. You write it. Send the insurance company a check once a year or once a month, and if you die, and it's for a set period of time, 20 years, 10 years. If you pass away during that time frame, they pay. It's pure insurance. It's not designed to be a retirement vehicle. It's not designed to build cash value or any of these other types of more permanent insurance. It's straightforward. And I like to put real numbers to things and compare the two. Does anybody have any? I ran an analysis, the real numbers, analysis for a male, 30 years old, in excellent health. If you smoke, stop. That's my big advice. For 20 years. So this will take it from a 30-year-old, presumably having children, has kids, still 50 years old. Does anyone have any idea how much $2 million of insurance would cost for that person?
$130.
Huh?
$130 a month.
$1,300, $1,400, $1,500 a year.
It's just a guess.
Okay, that's a guess. Any
depends
other?
how fat you are.
Hell, this is for the best rating, most highly rated non-smoker.
Oh.
Anybody have any idea how much it would cost? Any other guesses?
$12 a month.
Huh? $12 a little bit more. It would cost. It cost $805 annually. $800 annually for $2 million of insurance.
Might have to get it.
That's a lot of money. $2 million is a but it's in some ways it's less than you think. In a way, I mean, $1 million is not $1 million anymore. $2 million isn't what it used to be. And
exactly what it used to be.
Everything costs more. Everything's what it costs more. So $2 million. If you have a $200,000 mortgage, if you want to put some money away for college, but this is I ran quotes on. So that's an example of what a term insurance policy would cost. The real number. For women, it's going to be less, probably significantly less. Anybody have any? If both spouses work, they should both have insurance. Work, if you get insurance through work. This year, I just took advantage of group insurance through work. Part of my insurance is owned by myself. So if I were to leave my job, it stays with me, it's mine, I don't know. Other insurance I get through work. You get group rates, it's cheap, take advantage of those. I increased my insurance through work this year from $500 to $750, and it was like not much of an additional cost. Maybe you look at that, it's a good place to get insurance. But if I were to leave the firm, I would lose that insurance, and I would probably get it someplace else. But I mean, if you work, take it. Yeah, please.
If you're healthy, it can often be more cost effective to go out and get your own policy. But for some people who may have conditions that make them less or uninsurable, if you're working, you want to take advantage of group policies because they don't look at you as an individual. So you may be able to.
And I just went through it last year, but if you mentioned 30, I did it at 33, but the difference, as you get, year by year as you get older, it is kind of, it's not exactly exponential, but it's huge. So, so it might make sense to get it at 30, even though you don't need it, because over the course of time, it's a huge difference.
And things pop up. I had a little skin cancer. It's like no big deal. I'm still here to tell the tale. But guess what? It's killing me with insurance. I got insurance. It's a real. So when you're insurable, do it. And term insurance is a good, cheap way to get insurance.
Oh, I have a comment actually, not a question about insurance. But my father, when he was 26, he had a medical issue that prevented him from getting life insurance for like 10 or so years. And by the time he was able to be insured, he had 2 kids and a wife, and wanted insurance in case something, God forbid, would happen. So my parents actually, this is a little weird, insured my sister and me when we were teenagers, just to make sure that we were healthy at the time. And now we have life insurance, and we will always have life insurance in case, God forbid, something should happen now or down the line or whatever.
Years ago, it used to be like the Gerber plan.
Mm-hmm.
Yeah, those were an example. You still see the advertisements for them. That's pretty out of it. Those are more permanent insurance, cashback, kind of whole life,
Right.
whole life policy.
It's like $2 a month when you're born.
And then there's a cash value there. So, any other questions on term insurance? Because there are other types of insurance out there. Pure insurance. You die during this term, your beneficiaries get a check. Straightforward. The other type of insurance is permanent insurance. It's designed to do a lot of things, and there's a lot of bells and whistles with these types of insurance. They can be used for retirement planning. It used to be, I don't remember the movie It's a Wonderful Life, but when he's talking to Scene, he goes, I have an insurance policy, he has cash value. Those are insurance policies, old-fashioned policies, that would have cash value in them. They would be building up cash. And they were provided death benefit if you were to die prematurely, but they were also designed to do other things as well, to build up cash, to be a supplemental retirement, to do that. Now, I also, with some numbers to it, I ran an illustration with under the same terms for a permanent insurance. And I said, what would $2 million of permanent insurance be? So that you pay, this is you pay for 20 years and it's done. This you pay for 20 years and it's paid up. You have $2 million of insurance for life when you're 70. Now, why would you want insurance when you're 75, 80 years old? Presumably your mortgage is paid off, the kids are gone. People like it. Permanent insurance for estate planning, to provide liquidity, a whole range. There's a lot of reasons you would want insurance when you're 80 years old. Can't imagine those now, and I can't imagine for myself, but there are reasons that people do buy insurance. So any guesses on what for an insurance policy? This is from John Hancock. You pay for 20 years. It's paid up, meaning you don't need to add anything to it. It's paid up, and it gives you $2 million in death benefit forever. No cash value.
$2,400.
For 2 people or 1
A year?
For 2 people or 1 people?
One person.
One person,
One
a
guy.
male?
Yeah, one man. Yeah, one person. What do you
Don't worry,
guess?
I'm not going to look.
Well, you can't say
Well, it's
anything.
more than $800.
More than $800. What do you think?
$4 grand.
$10,000 a year.
But-
I remember sitting in my living room with a guy before I was even right when I got married, talking about it, and it was too expensive. I'm like, $10,000 a year. It's insanity.
And you got to die to get
I could have done it for a lot less than 10,000 and may do some different things with it, but, you know, you can see the contrast. I mean, so why term insurance is so attractive.